I am mining investor and editor of Resource Stock Digest. Head out of the Del Real here with my partner, Mr. Nick Hodge, who of course is also an investor and the publisher of Daily Profit Cycle. This is the 312th episode of our weekly therapy session, and we might have to start doing these every couple of days the way the markets are going, but we call it Investing in Bizarro World. We're going to talk about the crazy markets. We're going to talk about the crazy world that we live in. We're going to talk about what we're investing in. It's going to be a fun episode. Mr. Hodge, how goes you? We're still here.
I got my stress ball, Gerardo. I'm doing some conditioning on the elbow. I'm doing good, watching the wonky markets as you are, rubbing your gold. You got a new routine. What's up?
Well, your morning routine inspired so many last week, Nick, that I was just in the moment this morning, and you just caught me at the tail end of it. I mean, this is, how I wake up in the morning. This is what I do every morning. This is how I ground myself and center my chi, and I calm myself. So you just caught me at the tail end of it. Don't mind me.
With that much weight on, it's much easier to ground yourself with gravity pulling down.
What a week. How are you, sir? First and foremost, the important stuff. How's your beautiful family? How are you? How is health? How is that stuff? Important stuff.
They are not with me. It is spring break, and my wife has taken them to Tejas to visit their grandparents. So they are in Houston. They'll be back this weekend, and then we'll do our little Disney trip at the end of the month. Well, I guess in May. So looking forward to that. But it's been a calm week here in terms of not having 3 kids running around the house and school being closed and no sports, but certainly not a calm week in the markets. How are you?
I'm well. I'm refreshed. As you know, my beautiful wife and I were in Costa Rica for a few days. Jokes aside, that was very grounding, very rejuvenating. Had an absolute blast. Good to be back at it. And what a week to be back at it. I mean, holy smokes. Let's get into it. First, the major indices. I don't want to start with the major indices. I think most people started focusing there. I want to start with the bond market. I've long said that the bond market is always going to be the market that holds the most weight and that holds the whip and that really controls the ship, right? And it proved it this week. I had long said, as had you, that if Donald Trump didn't bend and Jerome didn't bend, the bond market would make them fold. And the bond market absolutely did. And by the way, folks, without spoiling too much, it's not done. The dollar index is down to 101 as we speak. It's below 101. Down 2%, and the 10-year is up. Those two things are not supposed to be true at the same time. A weaker dollar with higher rates. I think we have a lot more volatility coming. The volatility index seen levels we haven't seen since COVID. The president backtracked the tariffs, except he didn't backtrack them on China, which is the most consequential partner, if you want to label them a partner, that we place tariffs on. And not only did they not take them back, and not only did China not apologize and bend at the knee, China said, hold my beer and take this. Here, I got something for you. Take that. Thoughts?
Oh, that's a pretty good summary. I'm not going to say what I was going to say. I mean, it's like street justice out there, right? I mean, it's going back and forth, and this is not very presidential, and it's certainly out of the ordinary. Like I've heard terms in the past couple of weeks that I haven't heard in a long time, like Pax Americana, the end of Pax Americana, and the end of the which is the American peace and wartime regime after World War II. And I've heard a new global trade arrangement, the most significant since Bretton Woods, right? So these sort of terms are getting thrown around, and then there's other superlatives that are stacking up. Like I think we had the worst 2-week slide in markets in 40 years. And then we had the best day on the NASDAQ ever in history, highest volume day, all in the past 2 weeks. Significant moves in the bond market as well, which you were just talking about. Then I was going to read to you, if that was okay, just 3 paragraphs from the Financial Times, because the bond market is bigger than the stock market, as you say, but not a lot of folks spend a lot of time paying a lot of attention to it because,
Right.
They have their 401ks and they're allocated and they're not really bond owners. And the bond markets have been, not great for a long time, the U.S. bond market. So anyway, but, just like we had the Japanese carry trade unwind back in July, if you'll remember that. And then there's this term all of a sudden that everybody's an expert about, overnight on Twitter and then in the blogospheres. That's sort of happening with this um, this treasury trade, right? This basis trade. And so I just wanted to explain it first to myself and then second to the audience, because we have a lot of new readers or watchers, actually, by the way, and thank you for that. So I just want to make sure they understand the basic tenets of what's going on here. So from the Financial Times, it says treasury futures contracts typically trade at a premium to the government bond you can deliver to satisfy the derivatives contract. And as a result, this opens up an opportunity for hedge funds to take the other side. They sell treasury futures and they buy treasury bonds to hedge themselves, capturing an almost risk-free spread of a few basis points. And then they take those bonds that they got and they use them as collateral to get loans to buy more bonds. And so that was me editorializing. Now I'm back to the Financial Times. Let's say you put down 10 million for treasuries and you sell an equal value of treasury futures. You can then use those treasuries as collateral for, say, another $10 million of short-term loans in the repo
Imagine
market.
that.
Then you buy another $10 million of treasuries and you sell an equivalent amount of treasury futures. And then you repeat that process again. In other words, just $10 million of capital, are you ready, can support as much as $1 billion of treasury purchases, right? So they're taking $10 million and they're levering it up into $1 billion. And this is underpinning the purchase of the treasuries, right? And when some of them got caught off guard recently in the past couple of weeks, the folks that they were getting those loans from, that they had put up the treasuries as collateral, were saying, oh, fuck this, we're calling it, and we're selling the treasuries, right? And then that's why you saw the bond yield spike that we saw this week. Maybe China's selling too. There's a lot of tinfoil hat stuff going out there right now, going on out there right now, and you're still in the middle of it, right? So sometimes you don't really know in real time exactly what's happening, but that's the basis of the basis trade there. So anyway, I don't know if that was on topic or not, but that's what you were talking about in terms of the bond market getting wonky.
No, very, very, very on topic. That's exactly where I wanted to start, because I know that, look, the bond market is the boring, quiet partner, right? That's very conservative dressing and doesn't speak much. And however, underneath all of that quietness and underneath the glasses and underneath all of that other stuff is a born freak. That's the bond market. And when that little freak gets going, male or female, you have yourself a hell of a show. And what you saw this week was some of that starting to unravel. People calling, the glasses came off, and it's like, nope, I'm in charge. Dominatrix outfits came out and the bond market's been running it. I hate to tell the average Joe out there that it's not over, but this unwind is not over. There is a lot more to unwind. You have to remember, we are dealing with a stock market that by all historical measures is still very, very overvalued on a P to E ratio, right? Profits and earnings. And so when you look at that, sure, we're off some 15%. There's a lot more that can come off. And so we're going to get to why my morning routine consists of, grounding myself in gold and gold things. But yeah, there's a lot more volatility coming, folks. There's a lot more downside in the overall indices. That is not the playground or the sandbox that I dabble in. But obviously have to stay aware. And the 10-year and the volatility index are absolutely two of the indicators that I watch like a hawk every single day. And that's flashing warning signals to me, big ones. Today's sell-up isn't the last one.
No, and the VIX is still elevated, so that's a point I wanted to make. The VIX is the highest it's been since COVID, so it's flashed to above 60 at one point this week, and it's closed above 50 is the important part to get out. When you had that Japanese yen carry trade last July, it went intraday above 50, but it didn't ever close above 50. That was sort of a one day and done type thing. This is, you've had a sustained VIX, certainly above 30, and then, as I just said, above 50. And then the price swings you get, as you're obviously seeing, right, 2,000 point moves in the Dow in both directions on the same fucking day. That's what happens from an educational, market student standpoint. When the VIX is high, when the VIX is up above 30, you get wider price swings, right? And not just to the downside, to the upside. as well. So you mentioned the weaker dollar. We've been saying that, you know, that little false breakout a couple of weeks ago was a false breakout. The dollar was down. You said that they're going the opposite directions now. And so stuff is wonky out there. I'm not sure what you want to talk about in the macro market, but I guess I would say that. So you saw the NASDAQ the other day had a record
Yeah.
up day, right? You know, well, this is what I was going to say. So now I'm getting my train of thought back. You know, the last time or some of the other previous record NASDAQ days, they came during the dot-com bust, right? They were bear market bounces during the dot-com bust in the 2001 to 2002 move. And so just because you had the biggest up day in the NASDAQ doesn't mean everything's all hunky-dory. And then to your point about the PE ratios, that's exactly what I was just writing about. So the macro issue of foundational profits will be out tomorrow, April 11th. And I did a retrospective. I went back and looked at the past 4 issues and just sort of reanalyze, you know, what we were seeing and doing leading up to what we saw. And I was flashing warning signals as early as February 6th in terms of repositioning ahead of what was coming in March and in April. But I ended the year 2024, the year-end 2024 issue with a warning about valuation, and it went like this. It's been tough to keep up with the stock market performance without chasing historically high valuations, with the Shiller PE ratio now at 38.68. That measures a stock's price against its inflation-adjusted returns over the prior 10 years. And going back 153 years, it's only been at these levels 2 other times. Those 2 other times were 2021, and the stock market lost 20% the next year in 2022. In 1999, and that's why I brought up the dot-com crash, because the S&P then lost double digits for the next 3 years, 2001, 2000, 2001, and 2002. So, those valuations were historically high, and just, you know, taking a step back and looking down at it from a mile up or whatever, through 30,000 feet, however many miles, in foundational profits, you know, we had been beating the market for a long time, and exactly what I just said in that year-end issue. It's tough when you've got, you know, sectors of the S&P that are going up 20, 25% in a year and carrying the entire rest of the market. And they've got PE valuations that are so overvalued. But what happens is, by staying the course and by being able to see the forest for the trees, when events like March and April 2025 happen, you're not caught up in, you know, the NVIDIAs of the world and the Teslas in the world and the Apples of the world, which are, you know, getting their asses handed to them. You're instead in something like a 30% cash and 20% gold and 15% gold stocks, like foundational profits readers are, right? And so, yeah, did we not beat the market last year? No, but did we beat the market in 2022 when I just told you it was down double digits? Yeah, we beat the market that year. And are we beating the market this year? Yeah, we're beating the market this year, right? So over time, that's how we build our nest egg, and that's how we manage it, right? So anyway, shameless plug for foundational profits, but I wanted to mention the Shiller PE, since you brought up the valuations there, and say that, yeah, like even after the days that we just had, there's still, you know, overvaluation in the market.
Yeah, I want to. You read something earlier about the bond market. I want to read one more thing from. I saw this on X. It was a great post by, and I'm probably butchering the name like everybody butchers mine, but it's from Cullen Roche or Roche. Let's go Cullen Roche. From Discipline Funds. So they, just to summarize what's happened in the last few weeks, the post reads, they concocted this whole thing talking about the tariffs based on a fundamental misunderstanding of the global economy. They think manufacturing jobs will come back. They won't. They think free trade made us poor when it actually made us rich. They think the current account deficit is unsustainable when it's a rounding error in our aggregate net worth and also accretive to our net worth. They think being the reserve currency is bad when it's a sign that everyone wants to do business with us. And they think, they being the administration, and they think poor foreigners were taking advantage of us when we're the richest economy in human history. And to fix all of these problems, they implemented the one policy idea that almost every economist alive says is bad. And when they implemented that idea, they misunderstood the math behind the rationale and came up with numbers that were irrationally huge. So they had to backpedal. And when bond yields moved a tiny bit higher, they panicked and fixed all of this by making the numbers slightly smaller. But they clearly haven't done the math again, because the numbers are still way bigger than any economist would ever recommend they be. Then they patted themselves on the back because of intraday moves in stocks, while an economic hurricane continues to barrel towards us because they have no idea what they're doing. Amazing stuff. Great post, insightful, accurate. The math is mathing on that post. That makes all the sense in the world to me. And I subscribe to that theory 100%. I got to say this. I am not, I don't lean politically one way or the other. I tend to lean left on some issues. Financially, I tend to lean, right on some issues. Gun rights, I tend to lean right. But that's lean left and lean right by historical standards. Both these parties are basically the same thing nowadays, just with different things that they want to take advantage and manipulate, right? And so when I see Chamath, pronounce his name for me. You know who the hell I'm talking about, Nick.
Palipatia.
That guy, when I see this guy, right, a billionaire who's done a piss poor job the last couple of years, by the way, with his SPACs, and we all have bad years. I'm not knocking him for that, but when I see this guy on Twitter, on X, proudly talking about how he was a lifelong Democrat and used to donate so much money to them, but he couldn't get anyone on the phone, and now that he leans right, he says there's no one at the White House that I can't get on the phone because of my donations. So when I see the amount of calls that were bought 10 minutes before the tariff announcement was made, I mean, the corruption here, folks, if you can't see that, if you don't understand just how corrupt the current administration is, and I'm not saying the last one wasn't, I'm just focusing on what we have right now. What we have right now is corruption from top to bottom. They front ran the pulling back of the tariffs, and I'm actually glad they got their asses handed to them again today because the dumbasses went in and they bought the 7 stocks that were liquidated, the previous several sessions. They went back and bought Apple and, the big 7. And of course, those are the ones that sold off again today. I just hate and feel, for the bottom 99% of the world that is going to be severely, severely affected by policy decisions that frankly didn't have to be made. To take a one-size-fits-all approach on the global economy and place tariffs on the entire world and start a trade war with everyone, allies and enemies alike, isn't just a miscalculation. It's sheer stupidity. It's sheer stupidity, and the bond market's not done, folks. It's going to be there's going to be a lot of fireworks in the coming days, and with that, I want to get your take on the corruption and the front running of it because it was nasty, Nick. I mean, it was horribly nasty and obvious and just blatant. I mean, they didn't even try to play it off. They didn't do it like 60 seconds before or like a minute after the announcement. They front ran it by 10 minutes, man.
That's why I don't lean left or lean right. I lean back. I'm joking.
That was well done, sir. That was well done.
Look, so I get the reason behind the tariffs. I understand the philosophy and the hollowing out of the manufacturing middle class and the exporting the production of goods to Asia and China and other countries. I understand that, but I don't think, as you said, we have a good enough understanding, certainly I don't, of exactly how the tariffs are going to work. Who even pays them? Like I've been reading about that. That a lot of contracts have a clause in them that whoever takes the shipment at the port pays the tariff, which would be like U.S. corporations who are importing, right?
Sure.
So we don't know. Like set aside the potential rise in the cost of goods that people are talking about. We got to talk about inflation, by the way, because it went down, and I told you so. The headlines are unexpected inflation, and it printed less than 2.4, I think. But anyway, we don't know. Well, we do know what these goods would cost to produce in the U.S. And so that's what I'm saying. I think he's coming from a good place, but I'm saying that we don't know what the outcome would be. Like who's going to pay these things and if the prices would go up, that's one thing. But I saw a study the other day that was talking about like how much an iPhone would cost to produce in the US, given the internalities. Last week we were talking about the externalities, how we don't account for the, safe labor and safe water and air and emissions and stuff like that. $30,000 to $100,000 to manufacture an iPhone in the United States, right? So I get that we're paying a couple of G's for them already, but I don't think that we're going to be paying at what I just said there, right? 10 or 30 to $100,000 for an iPhone, right? So you might not even be able to produce the goods that you want to produce in the US if you enact these tariffs, is what I wanted to say. But back to what you were saying. Yeah, I saw reports about call options that were purchased on the NASDAQ for a couple of $10,000 that turned into a couple of $10 million. The president tweeted that morning. I'm not sure if it was on Twitter or Truth Social or whatever, because I don't pay that much attention, but he tweeted, now is a good time to buy, right? Like all capitals buy. And then you can see when the call buying comes in. And the reason that it's so unusual is because the market was getting its ass handed to it,
Oh
right?
yeah.
Like, I mean, the NASDAQ is
Yeah.
down. It's in crash territory, down more than correction, down more than bear market, like down more than 20%. And you wouldn't be going in there buying these short-term calls unless you had specific and concrete knowledge that the market was about to do a 180, right? And sure enough, that's exactly what it did. And so somebody knew something, and it just speaks to the incestuous nature of the establishment, and why Trump, for all the caps and all the shouting and all the spittle that comes out of his mouth, talking about draining the swamp, he's got his own swamp around him in some respects, right? And we saw in the inauguration how the billionaires ponied up dollars to get essentially access and proximity. I mean, they're paying for closeness to the guy, right? And those are the same sort of folks that would benefit from having that insider knowledge, like the Chamath that you mentioned. And so again, no matter who is in office, there's a reason that we stay separate and we keep an arm's length, because they both have significant faults, and many of those faults are the same on both sides.
Yeah, I continue to be hopeful of administrations, regardless of political affiliation, when they come in. And I continue to get my ass handed to me by both political parties every time I try to have an open mind. And just to be absolutely clear, folks, the tariffs, the existing ones on China, the existing ones on Mexico, and the ones that they took back are very consequential. And if you think that it's just going to affect the billionaire class or the rich, just listen to Amazon's CEO, who just said the sellers will pass the increased tariff cost on to consumers. It's everyday folks that are going to have to pay the extra tariffs. China's working around them. They're shipping a bunch of stuff to Vietnam because we took the tariffs off of Vietnam. So now they're shipping it to that port and just working it from there. There's loopholes around everything. And I'm not saying that the current system as it was under either administration was the right system. We've long argued that it's corrupt, that I hate the Fed. I thoroughly believe the Fed has hollowed out the middle class over the last 30 years. That's another rant for another day. But you can't just take a sledgehammer or a chainsaw to the economy and not care because your friends are making hundreds of millions of dollars on it by front running the market on policy decisions that you're leaking to your buddies. It's not moral. Forget the legalities of it. It's just not moral, folks. So that brings me to how we're going to make money, which is how we've made money, which is why my morning routine, again, consists of rubbing myself and grounding myself in gold, right? Look, gold, for all of the margin calls and all the redemption selling and all the liquidation that happened in the market for a few days when the margin calls were coming in, right back up at record highs at $3,200 an ounce. Overhead resistance doesn't have any resistance. So when I see the bond market going higher, the dollar going weaker, inflation, you said, had come down. I'm curious to see what those numbers look like in 2 or 3 months with these tariffs and what that looks like, right? It's the perfect storm for gold and silver to move higher, folks. And if you haven't positioned yourself yet, I don't know. I don't know what to tell you. If you haven't positioned yourself yet, I would say subscribe to Nick, myself, and others that do this for a living and that do it with their own money and that allocate their own capital and that live from this, right? This is what we do. We're not journalists that just write about stuff and then it doesn't matter to us. It's our livelihood. I would suggest writing in and asking some questions. You have to be positioned. There's no way that you all get to miss this bull market in the gold and silver space. and not make money from it, despite the chaos and the volatility. I've had one of my best weeks thus far, with some of my core picks and my largest positions, and the good stuff's just about to start at the end of the month, right? So I couldn't be more excited for 2025. I do feel for the average Joe, the hardworking person that relies on that 401k, especially people that are older and closer to retirement age that were maybe a year or two away. Those are the people that are going to get hurt the most, because this does have the potential, folks, to cause a recession and to drag on for a couple of years, regardless of what the Fed does. Everybody's yelling for Jerome now, right? I don't care if Jerome cuts rates next month, if he has an emergency meeting, if he does, QE, if they slow down on QT. None of that's going to help the average Joe. It's not going to help Main Street. It's only going to benefit people that have financial assets and access to the markets. And put yourself in position, folks. You don't have to like the game. You don't have to like the rules. You don't have to like the players, but you should be investing in yourself and investing in a way to at least profit from the chaos that's going on, because there's very easy, concrete ways to profit. None of it's risk-free. Anybody that tells you that's a liar. But there's ways to mitigate that risk. And I think, the performance with our portfolios, Nick, the past several years speaks to that, right?
Absolutely. There's a lot of real world implications as well. Before we started recording, and I've talked about her on this podcast and written editorials about, Jackie, the lady who helps us with our house, and how she received an inheritance a couple of years ago. And I helped her finally get that set up in an IRA earlier this year. Well, she bought into the market in February, right? I can't imagine. Well, I can imagine, because I set her up okay. I'll look with
Yeah.
her next week when she's here. But I imagine she did better than a lot of other folks in the market because of how I allocated her IRA. But it's still going to be down. I mean, for sure, she owns like the total stock market or whatever. And so it's definitely impacting real world people like that. And you mentioned people close to retirement. Earlier this week, I had a call with my insurance lady who does like my long-term care policies and life
Yeah.
insurance policies. And I was talking to her just about those types of policies and stuff like that. And she said she's got older folks coming to her who just took a haircut on their retirement portfolios,
Yeah.
401ks, whatever it is, and are looking to, now roll that into something safer by buying some sort of policy that has a return of premium or some income portion to it. But they're locking in their losses, is what she was saying. Like you
Yeah.
just took a haircut, and if it's just a point in time, right? And so if you sell at this point in time, your retirement, like you're locking in those losses, and you're starting with a smaller, whatever principal amount on this policy that I would set up for you. So people definitely struggling out there. And gold, as you mentioned, is looking really strong. You mentioned inflation; it just came out. I was saying it was going to go down back in March, and I was saying that oil had come down, and it continues to come down. It's got a 5
50
handle on it.
yeah.
Exactly. And so other commodities have been soft, like some of those ones you saw earlier in the year and late last year that were getting a bunch of headlines, like coffee and chocolate and stuff. Like that stuff has come down. And so that's why the inflation number came back down, and it's going to do one of these, right? Which is what you're saying in the second half of the year. Well, first, let me say inflation going down, stock market does not like, especially when growth is going down, right? So you get these growth scares from the Doge stuff and the firing and the freezing of the hiring of government employees. And so you got the GDP scare that we know about and we've talked about with the Atlanta Fed projecting negative GDP for the first quarter. We'll get that number, I think, on the 30th of this month, April. GDP is going to be down. And so inflation is going down, and that's fuel to the selling. Like the market stocks don't like when those two
Nope.
things are going down. And my view, my belief is that in the second half, those things are going to tick back up, right? So let's put the tariffs aside for a second. You're going to get a budget, a congressional budget negotiation here soon. We got a debt ceiling thing coming up in July. They're going to raise the debt ceiling, right? They're
Fucking
going to
surprise, right? $1 trillion defense budget, however you feel about it, and another, potentially $1.5 trillion added to the deficit. Go Doge.
and they're going to give you your tax cuts.
They're give us our
And
tax cuts.
that's right. And that's gonna foster, and you're gonna get a rate cut also at the June meeting, if not before, if the market keeps on doing what it's doing. And so you're gonna get back to growth. I'm not saying, it's going to be 4% growth and the U.S. is going to be, come out swinging its dick. What I'm
Yeah.
saying is that the rate of change is not going to be going down like it is with these initial Doge cuts. And so, sorry, I'm weaving together a lot of things here now, but then when growth and inflation start going back up, then stocks can go back up. And you will have then had two things, right? A rate cut, and inflation going back up, both of which are good for gold, which is what you were saying like 5 minutes ago, right?
Yep.
And so you have gold already at a record, and it just sort of keeps going because this is what it was last year, right? Like gold was strong with a strong dollar, and
Yep.
now it's got a weak dollar, and now it's going to get rates going down, and then it's going to get, whatever, inflation going up. And so when I look at like the short term bullish bearishness, like of the big things, the sectors of the S&P, bonds, gold, silver, copper, Japanese yen, Japanese
Yep.
stock market, Chinese stock market. The only thing that's bullish, Gerardo, is like gold and volatility.
And silver. I mean, we can't
It's
talk
right on the
bullish.
cusp, but yes.
Yep. I mean, silver, for all of its underperformance, right? It's nowhere near historic highs. It has to breach the 49 handle to get back to that level. It's at $31.10 an ounce as we speak. However, I am absolutely confident that before the year is out, silver is much higher. I think it's going to follow gold much higher. And again, there are ways, depending on your risk tolerance, folks, there are ways to position to have, the kind of leverage that chaos and volatility provide if you allocate capital correctly when everybody's being fearful, right? And so the sector rotation for what Nick and I do is actually welcomed. I like seeing money come out of, the big seven and the overall indices. I like it when, gold miners and copper miners are profitable and have robust balance sheets because they have a lot more capital to go spend on the new discoveries, the future discoveries, the explorers that are making some of these. And look, everybody knows that Nick and I differ in the way that we speculate and allocate capital. I tend to keep very little cash on hand, while Nick sometimes will have a 30, 40, 50% allocation in cash. Me, I'm buying junior explorers with $20 million market caps and, betting that I can get a 50 to 100 fold return over the next 2 to 3 years. Thankfully, doing it often. We've had several of those over the past couple of years, and I think we're in position to have another 2 or 3 this year if things go halfway as good as I think they're going to go. We're well on our way anyhow. And so, look, whatever your risk tolerance is, folks, there's a service for it. Shameless plug. Go to digestpublishing.com. Nick writes 3 letters. I write 3 letters. We have different approaches. We differ in our approach, and we differ in the markets that we cover, but we're also very similar in a lot of things and look at deals together every single day. So there's something there for everyone. If you're into crypto, it's not my cup of tea, but we have our in-house expert, Chris Curl, who's been spot on with his crypto calls, by the way. And there's still a lot of money to be made in that space, according to Chris. So more than one way to make money in this market, folks, but you got to be in the game, sitting back and just hoping that, Trump and the administration and the Fed and everybody do the right things is not a strategy. It's not going to do it for you. We have seen on all fronts, whether it's immigration, economic policy, fiscal policy, the complete war, the complete opposite of what we were told. We were told that there were going to be deficit cuts. The budget was going to shrink. We were going to fight massive fraud. We were going to go after violent illegal immigrants and focus on getting them out first. And instead, we're snatching U.S. citizens and people that are here legally off the streets. We're sending them to foreign countries at El Salvador. We're paying El Salvador to house them. We're passing budgets that are going to add trillions to the deficit. We're passing record high military defense budgets. And look, at the same time, again, mainstream America is the one that's really getting beat up here because Microsoft just decided it was pulling a $1.3 billion project from Ohio because of the uncertainty around the tariffs. They didn't feel like allocating that capital in this market environment was going to be the wisest use of their capital given the volatility, right? And so, cool. You might think, fuck Microsoft, who cares? They got plenty of money. Yeah, but that's 5,500 jobs to a small town in Ohio that just aren't coming anymore, or at least not for now until, things get back under control. So you have to be proactive is what I'm trying to communicate to you folks. And hopefully I've done a halfway decent job with my rants and raves.
No, it's been great. The performance of Junior Resource Monthly has been wonderful. We've shared some of the testimonials. As I said earlier, we've got more people subscribing for the premium portion of this podcast to hear us talk about how all those premium newsletters, those premium products relate to each other, and to hear about some of the things, some of the companies and investments we talk about in those premium letters. And if the folks are all over the place, like we're running a renewal this month for Foundational Profits, and you get a book. If you renew, you get a Dines Gold Bug hardcover book. And so I've been printing out the labels to ship them off. And like I just sent one to a retired doctor who lives on the water in Galveston, and then I sent one to a grain farmer in an hour and a half southwest of Chicago, right? And so, these people are just all over the place, and they're being students of the market, and they're trying to educate themselves. And at least in Foundational Profits, that's what we're doing from a retirement, long-term capital management standpoint. And then you're into things, obviously speculating on the small end of the mining spectrum there. So yeah, get in there, check out the products, ask us questions, and reach out if you need some help or you don't know where to go. We advertised this week, Gerardo, speaking of people joining the podcast, that we were going to give away 2 Selloff Stocks a piece, given the carnage that we've seen in the market over the past couple of weeks. You actually see the sheet there. I see your cursor going around, and you picked one that I was going to talk about, so I have to come up with another one. But
We can
I
share
guess
it,
what?
Nick.
No, that's all right. I'll do another
Trying to
one.
give the good folks 2 picks in earnest.
Yeah, I'll give them their money's worth. So I guess I'll take your job for a second and say, with that, you want to transition to the premium portfolio pick section of the podcast?
Let's do it. Let's do it. Everybody have a great week out there, but let's get to the premium portion of Bizarro World, and let's get to talking stocks, folks. I am Gerardo Del Real, along with my partner, Mr. Nick Hodge. This was the 312th episode of our weekly therapy session that we call Investing in Bizarro World. Cubs are back. The Cubs are in first place in the standings so far. We have a good-looking team. We need a closer. I'm excited for April. Lots of excitement going on with drill programs kicking off, Hannon and Kingsman, among others. Send us off, Nick.
No, that's it. Going to be a busy spring. I'm not as into baseball, but I've ordered my sunflower seeds. I'm getting ready to do fertilizing and weeding, and I'm behind because I can't lift as many heavy things with my elbow. But I'm getting there, and I'm excited for the spring as well. Have a good week, everybody.
Take care, y'all. I'll look more serious next week, I promise.